Okay. So here you have a distribution phase. Oh, right, this is your chart, so this will probably appeal to you quite well. Now, what you have is obviously you have a distribution phase, but that's not really the point of this chart. Now, the point of this chart is that the price has suddenly fallen. Now, on this bar you've got a wide spread down, and it's below a previous support level there. Okay, so that is definitely a weak bar, and then I would say that that indicator is not quite right, but it will probably refer to the previous bar. But this is why I say, Rick, that if you look at a 10 or a 15-minute chart, then you'll get a much clearer picture. Thanks, Jim. You'll get a much clearer picture. So that, for example, I would probably definitely short on that bar, being an up bar, because I can see that the close is quite close to the close of its previous bar. You're going to have a hell of a lot of movement if you drill it down to a 2 or 3 minute time frame, which probably might even make it untradeable. But as you can see, the chart seems to flow along really quite nicely. I mean, there's a really nice little test there, and you've got higher lows. Downside risk is quite low. Don't forget, this is 25 euros a contract, and that has a big fear factor, like the old big S&P did. And that's why that's a really nice bar. You can see, if I'm going to go short, and I've got some of this programmed into another program, which I'll use for testing. If I've got the high, the close, and it's lower than the high, but greater than the close of its previous bar, and it's closing in the middle like this, the volume is slightly increased. I mean, that's a fairly good indicator, especially if I've got this topping out phase right there in the background. Got a fairly wide spread down, increase in the volume, next bar is level, and then it starts to come down, just tick down, and then you start to see the real weakness on these up bars. I mean, these are pretty good bars to go in on, and that's why I favour a longer term time frame. You know, especially when you see a bar like that, Rick. You know, whereas that's a really good entry there, and there's at least what 10, 20 points out of that.
Yeah, you can hold it.
And don't forget, that's 250 euros for every 10 points, and that's nice money. But the whole point of this is not what I've been talking about. What I'm going to talk about is you've got stopping volume here. Okay, now it has made the market go sideways, but why does the market go sideways? Can anybody tell me why this goes sideways? You've got strength has appeared in the background, you've got stopping volume, close in the middle, it all looks good, right? So you've got a nice big down move, stop out a lot of traders, you can see there the volume's really high. Now, it's obviously fairly obvious to me, but can anybody tell me why the market has not responded to those signs of strength that's appeared? Sorry, Tony?
There's still some sellers there.
Where?
In the market, that's what I said. I mean, they try to take it up, but then there's still...
Okay, where is that? I've marked it on the chart, actually.
I would say that there's still sellers right there.
Yeah, but that's on the down bar.
Well, since you got it marked.
Yeah, I just gave it away. I thought that's what you were going to talk about. Right, so it's obvious, because I said that, I shouldn't have given the game away. Right, so you've got this stopping volume here, but look, you've got this high volume, even though it's only average, but if you take these other volume bars, it's still high volume. Okay, so that's why the market's gone sideways, because if this had been genuinely strong, you'd now have an uptrend. It would then get retested, and then you'd have an uptrend. But because you've got this high volume to follow the shakeout, the market's just gone sideways. Okay, so you want to be careful of that. Okay, so just to recap, if you've got high volume on down bars or stopping volume, and then you've got high volume on an up bar relative to the previous bars, it's not going to go anywhere, or it's going to come down and make a new low. In this instance, it went nowhere. It just went sideways. Okay. Right, again, this is a bit more advanced than we probably would have done before. So why has that test failed? Can anybody tell me? Right, I've got the test is marked there by this line. It's an 8-minute DAX chart. So why has that test failed? Tony?
You'd expect buyers to come in, but sellers came in after.
Okay, you're talking about before or after that line?
After. You'd expect the market to go up, but it went down.
Okay. So where you said that sellers came in? Can you mark on the chart where you thought that happened? This is part of the interactive session.
I would expect this bar to be up if this was a true test,
Okay,
but it wasn't. It was down,
right.
so that's why I would call that a failed test.
Okay. Does anybody else have anything that they want to?
Would that be the two bars before that bar there? The two red bar before it?
Yeah.
I don't understand it, but I understand from what you're saying.
Yeah.
But that's a lot of volume going up.
Yeah.
Too
Yeah,
much
you got
volume
it.
for going up. You
Yeah.
wanted less volume for going
You got
up.
it. Those two bars have high volume on up bars, and that's why that test failed. Okay? That test failed because of these two bars. Look at the volume. Look how high they are. You've got the strength has appeared, the market's then gone up on low volume, slight weak bar there, but then, as it comes down, back into this area, where there was high volume, the volume is now low, but there's too much weakness on these two bars. Okay? So if you ever see that, that's going to fail. And that's why the markets tick down. All right?
Well, that was one of the things that you covered in Chicago. where you
That's
said
right,
that,
yeah.
That if it went up like that on that high volume, expect it to come off. And
Yeah.
then you said if it went up on just average volume, then you could expect a
Successful test.
successful test.
Yeah. But can you see how it's broken that low?
Yeah.
So you get high volume up bars before a test. It's going to break that low. They've tested it, but you wouldn't take it. And I have actually taken that in the past. That's how I know it. That's how I know when it works or not. Because I've actually lost money on it.
Could you explain that a little more? Just, I don't know. I don't 100% understand it. I don't know if anyone else does. The fact that there's high volume means that there's a lot of supply there, and
At that
therefore, even though there's a low volume test of that, you're saying there's just too much supply, and that test is not
Yeah.
not valid.
Well, it can't be. It's too much supply. There. Look, they've made the effort to stop the market decline, right? But here, they become very, very negative, right, on these two bars. Look how high the volume is. It's even as high as this stopping volume. Okay, that's excessive volume up bars, which the market doesn't like. That's what Tom talks about. So if you see those, and look, that's another weak bar. Look how it's struggling to go up, look. How can that test possibly succeed? You've got weakness on two bars in the previous, which has overwritten this. Look how high, that's almost as high as that. Can you see it?
No, I see it, but at the risk of sounding pretty stupid, doesn't that test? Isn't that testing for supply? And the fact that there's no volume imply that there's no volume. You know what I'm trying to get at.
But the professional traders have seen the weakness on those two bars, and they're basically, it looks like a test, but they've just withdrawn from the market.
I see.
They're not supporting it.
Yeah.
If they were genuinely
Looks
supporting
like a
it,
test, but it's not because of the previous
Yeah.
two bars.
yeah. So yeah, it does appear as a test. That bar should be up, not down. But they've just withdrawn. They've marked the prices up and they've hit it as hard as they can, because they can see the weakness on the American markets. Tony?
Could you have a situation where demand is overcoming supply, and then so that bar following the test would be up?
You'd have to have average volume on these bars. Okay?
Okay.
So this compared to these bars is quite high. But it's really on that one. So you've got fairly widespread down and the volume's fairly low. It's fairly averagely low. But look, the next bar there's a lot of sellers on there. And that bar's struggling as well. So they just withdraw and they just allow the market. They'd have to support the market for that to be strong, and they haven't done it. John?
Maybe the same principle is applying just after your time 1432. You have two bars past that. You have a really super high volume in the salmon color
Yeah.
area,
Yeah.
and here you're closing on the high. That's way too high volume.
Yeah.
Something's wrong there, and so you would expect the test to fail.
Yeah. Yeah. They're negative. They're not really supporting the market. They're just withdrawing. They're just selling. Every time it goes up, they're selling. They're not responding. This is why, if the market's weak, there will be no response to any perceived sign of strength. Because they can't. They're not going to fight the market.
So if we're in accumulation phase there, right? We're trying with the bottom, we're in accumulation phase. The high volume should be on the down bars there.
Yeah, not on up bars. The highest bars should be on down, not up. And when you got, you know, high volume on up bars, it just shows that they're not interested. You know, so does that help? Bar stuff like this, does that help?
Yes.
Because
That first test, that's actually a test in smaller markets, so we write it off.
trend is down, so you would ignore that. Yeah, that's the bar you place the emphasis on. Fairly widespread down, taking out the previous 4 bars, the lows of the previous 4 bars. That's a weak bar. That indicator is correct. That one is not. Okay, so there's no way the professional money is going to support that when the market's weak. They're not going to support that at all. You know, and there's no stopping volume. Right? You've got high volume on an up bar, so that countermands any strength that may have appeared there. So that's no way that can possibly succeed. And that's why there again, because you've got the high volume on the up bars, that's why that doesn't succeed either. So, and look at the response. You know, it's just no effort to go up. It's just, you know, that's a weak bar, that's a weak bar. It's just going down, going down. So it's in a downtrend overall, but you know, there's just no response. So. Okay. So again, you have. I've probably overdone this one. Why does a test fail? But
Well, hey, no, you're not going to overdo it.
You're not going to do that.
It's important.
Yeah, we overdone it, we're fed up with it.
You see anybody walking out yet?
it's just mind-boggling. This, you know, I mean, the variations on a theme are almost limitless. You know, and I mean, the fact that I can see this stuff without anybody actually asking me to do this, I think, you know, I think that it just proves to myself that it was worth all the time and the effort that I put into studying all this stuff. Because Tom never showed me any of this. You know, I got this out of Tom's books. So, and you know, like Janet's looked at it, but you know, it didn't register. So, you know, and I specifically went looking for stuff like that. So, and it's good. It, you know, helps me out too. So. I just think it's paid off when I can do stuff like this because, you know, do you think this is the advanced stuff or do you think this is just the regular stuff?
I'd say that.
So, okay, good. So
We're getting our money.
on the top it is actually correct, so we're, you know, that's good. So, and I'd like to thank Brittany for putting all these charts into these PowerPoints and making them. So, she spent most of yesterday. I still owe you lunch sometime, Brittany, if you know. But, you know, thanks to Brittany for doing that. So,
Is it possible to get color, not paper copies, but get access to them? Oh, it's so much easier to see when it's not like that. I'm sure it is.
yeah, in order to keep the cost down, we.
I've got a little flash drive.
Well, if Sheena doesn't object, I don't mind when it's over.
Okay.
Okay. Okay, so, right, okay, so now, right, I've got to ask you another question, so why has that one failed? And Janet should know the answer to this because she's actually seen it happen. Or at least Janet's the only person I can think of who's seen this before. So just think about it, take your time, think about it. I mean, this is the stuff you want. You want to be able to answer this. Because you're going to go away and you're going to see this at some point in the future and you have to be able to figure it out.
Yeah, I was just thinking that is exactly the type of test I would take.
So you would go long on that.
Yeah, I would.
Okay, so can anybody see why it would have failed?
It's got sort of strength on, volume on the down bar strength. It's got the trend going positive directions. That's
I have to tell you that after this, the market did actually go up. So if you actually look at this on the 10-minute chart, you would see that there was actually a rally to follow that. So why is that test temporarily failed? It's fairly obvious to me, of course, but
The answer was next. You're talking about the
I'm not sure that I see it correct or not, but from about 4 or 5 bars back, the one up bar, what is it, 1800? From there
so
on,
you're saying, hang on, so you're saying this bar,
yes,
right? It's a low volume up bar, and
the volume comes up one bar, but basically from there on and the volume back behind that the volume's still going down in spite of the price going up. Am I out of the ballpark in what I'm looking at?
Divergence.
You haven't quite nailed it as the answer I'm expecting, but you are in the ballpark.
Are you on a cursor? That's a failed test.
Yeah, I know there's a failed test, but I'm asking you, why has it failed?
Because the next bar is down.
No, two
Okay.
bars prior to
All right.
that. 2 bars prior to that, you have an increase in volume. It goes up,
Talking about that one?
yeah, and then
Right.
it closes off the high.
Yeah, in the middle.
That's weak.
Okay, so, but that's an increase in the volume, but that doesn't necessarily tell you that that one's going to fail. There's something really obvious that I can see that tells me that I shouldn't really be looking for a test on that bar.
Previous bar's weak.
Oh,
How would you
there's
describe
no real down bar to stop the market from going on down.
Yeah, you're correct actually. There is an increase in, that's close on the low,
Yeah.
there's a lot of buying on there, the response is the low volume up bar, that tells you that there's very little response from that. And you've got a down bar closing in the middle, that's a weak bar, it's gone up, increasing the volume, closes very close to the close of its previous bar, then you've got a widespread down, you've taken out this low, so that is actually a weak bar. And you've got an up bar, okay, as you said before, that's a low volume up bar, and then it starts to go up on an increase in the volume, close slightly off the low. So,
The red bar right before that bar
right, what's wrong with it?
is weak.
Why?
Volume's low, closes on high.
Right. So this bar is closing in the middle, slightly increasing the volume, and then you've got a low volume up bar before that test, and that's why it's failed. So yeah, you got it right.
So,
Okay, so
And that bar's weak because the volume is down. It's lower volume. Than
There's
the
no
previous
response.
bar.
There's no response to the
Right.
uptrend. They're just not interested.
There's not increasing volume on up bar.
Yeah.
That's what.
Followed by decreasing volume on down bars. They're just withdrawing. And I think that the market's just resting at that point, but it did tick back down again. Maybe they just wanted to test this lows back here. You know, they withdrew from the market because they wanted to bring the prices back down to retest this low. But I do remember that the market did actually go on up after that.
You know, I don't quite get this. So you're saying the bar at 1830, for that to need testing, it needed to be higher volume there.
It should be average.
Should be at least average.
Yeah, it should be at least
that's
average.
The problem.
Yeah. Okay, and that's why the next one failed. Okay, it does actually look like a good test, but because you've got no interest or no support from the professional traders, you know, it's not going to succeed at that point. You know, and you haven't got widespread down closing in the middle. You haven't really got a shakeout or some sort of selling climax, which is what you need.
There's an awful lot more volume as it's coming down
Yeah,
over on the far left.
but they're not. Yeah, but they're not. They're not closing in the middle.
Right.
You know, and you got that one, it's closing near the low, it's broken that low, and then it starts to go up. You know, from that point, it's just weak as it's going up. And these are narrow spreads where the volume is increased, and they're closing off the high. They're not a widespread up and an increase in volume. As soon as you get the widespread up, the volume falls off, so they're not supporting it. There's no support, they withdraw. That's why the test fails. Bang. But it comes back down and then it goes shooting back up again. So it's just a temporary sign of weakness. Right, okay. So here we have a saucer shape, which is a rounding under effect. We have a rounding under effect, and this is called the saucer shape. Now again, there's no real, this is the S&P mean 5 minutes. Again, you've got no real stopping volume here. But what I like is this bar here, okay? You've got a down bar closing in the middle, and you've got this down bar where the close is lower than the close of its previous bar, but greater than the low of its previous bar. Volume's less than the previous two. As you can see, you've got a fairly good widespread up. So you've got an increase in the volume on this up bar after this fairly good strong bar, and you've got a deep down bar on a decrease in volume, okay? And then it just refuses to go down. Okay, so it then comes back down into its previous strong area, and then it bounces off it and goes back up again. But what I wanted to show you was this rounding under effect, and once you get that, that's basically a saucer shape, and then that tells you that the market is going to go up, and that's a sign of strength. Although right at the end there. No, it wasn't right at the end, but the weakness did come in. We got a nice little test there. I think that did actually top out after that. But what I wanted to show you was this. And what you're doing is once you recognise this saucer shape, you're looking for low volume on down bars as a confirmation, as a sign of strength. Okay, and as you've got a sign of weakness there, you've got a sign of weakness there. It's quickly overwritten by signs of strength. It's the excessive volume on up bars that you've really got to start thinking about, which starts to come in. That one was tested, but that one is really excessive, and then that's what you've got to be careful of. I think it did go up a few more bars before it came off, but that's what you've got. That's your danger to the upside. So you've got decent uptrend, but if you're looking to close out your position, you really got to be looking for something like that, a really big spike in the volume, and then that shows that the market is actually turning negative.
So again, you're looking for the low volume down bars.
Yeah, in an uptrend where you got higher lows.
At the very beginning, you said one of those 3 bars. You said something about closing relative to lows and things like that. I think that's never really sunk in for me.
You're talking about those?
Yeah. Say that again.
Okay. What I like is in an uptrend where you've got higher lows, you've got a down bar, close in the middle, and then the next bar is a very narrow spread. The close is lower than the close of its previous bar, but the close is greater than the low of its previous bar.
So inside.
It's an inside, what you might call a close inside bar. That works very, very well for me, and that is definitely one that I would take, for sure. I really like those. That tells me that, especially on low volume, that there's no selling pressure there whatsoever. There's absolutely no selling pressure there. But, the path of least resistance from that is up.
That's where you take the long move.
Yeah, in there. If I see those, that's it. No hesitation at all. But the trouble is that if I'm doing a live trading seminar and let's say it's like 16:05, that's 2 hours after, and I don't see that till say like 3 hours before the close of the session, most people who are sitting in the room are going to be pretty fed up with me by the time it comes to that trade. And that's the trouble, you see, and that's the trouble with trading. When you see these opportunities, you've got to take them because you don't know when the next one's going to come along. And that's your window of opportunity to make money. Keep you,
Well, that seems what most trading rooms I've visited do anyway. They'll take lots of trades and we're real happy to get out of them with.
Yeah, that's what I had to do.
Just to show some action.
Yeah, that's what I had to do.
It's just money management.
Yeah.
Really.
I don't like doing it. I don't like trading on a 2-minute chart, but I just feel as though I have to. I don't really like doing it anymore.
Your concept of lower lows, and obviously there's also a concept of.
Sorry, I don't have a concept of lower lows.
Oh, okay, not a concept. You were saying that the higher
Lower
lows.
highs.
I'm saying.
Yeah, higher lows. Yeah.
Higher lows, and then at that big up bar after the test.
That one.
Yeah, after that, now you start not having higher lows anymore.
It starts to tick back down, but the volume is low.
I see.
It's still lower than the average, but that's a major sign of strength. And it does tick back down, but it doesn't break that low there. So if you've got, say, your stop below down here someplace, I mean, I probably would just lock myself in and probably get stopped out, or maybe even close it out, maybe even on that bar. But Gavin would be much more conservative. He'd had something like an 8 or a 9 tick stop, and he'd leave it there. So he would actually stay in and catch that big move, whereas I would tend to sort of close it out. If it comes back down, then I say, right, okay. So you're looking for a continuation of the positive move as the market moves up, and they'll do that just to put you under pressure. So, but if I see that, then I'm definitely in. But if you see one of these on currency charts, normally it will just trend right up, and it's fantastic.
Okay, you see those 2 bars together. You see
Yeah.
sign. You see it's got to go up.
Yeah.
You're going along, but then that bar is kind of excessive. The next one, you're
It's
long
not.
now.
No, it's not. Look, because look at the bars here.
Yeah, no, those are very excessive. Okay. that's
So that
excessive.
one's quite low. If you look at that
Okay,
that
that's
high,
just more, okay, that's a strong bar then.
yeah.
So
Yeah, see, that's a positive response from that.
Yeah.
But then they withdraw. But why have they withdrawn? See, that's what you've got to look. Got a saucer shape. They've marked it up. Sign of strength marked it up. But why has it come back down? What is there in the background? I mean, I personally can't see anything unless you've got people drawing lines off these lows, or maybe those lows, and projecting them out and then shorting. But eventually they're going to lose money because the trend is up. But maybe the market, maybe the professional traders are just marking the market down to try and put people under pressure, or maybe even encourage them to short sell. Because even though you've got a fairly widespread up, you see it's closing near the high, next bar is down bar and the volume's low. Then you've got a test-like bar. There's no response immediately from that, but it doesn't come off very far before it goes back up again. And then right near the end, you've got a test bar, and then the market still carries on up. So, and then there you've got more of a Wyckoff spring. That's more of a Wyckoff spring. So, but I really just wanted to show you that sort of saucering under shape. And when you see that,
The 89.32 line, where did that come from?
that is probably the crosshairs. I don't. That's nowhere. See, when you put the lines on it, it has like a big box on it, and it's quite sort of obvious. But that's just the crosshairs. That's where it happened to be, where I was cooking it up. But as you can see, the market is actually going up in low volume. Okay, so it is actually it's gone through a trend channel. So there's one or two trend channels there, but you've got a test followed by low volume on an up bar. Then the volume really starts to come in. So, but if you see that, you want to be looking for signs of strength, not signs of weakness.
Is there an inverse to that? Those close inside
Yeah,
bars,
mushroom shape.
and then it's the same type of thing where it'd be close, but the little between the previous bars low and high.
Yeah, yeah, and the opposite would be for the top side. Okay, Bank of America daily. Right. So, this is going back to 2008, so it's obviously not a live chart. But again, once you're in a downtrend, you want to ignore these signs of strength back here. So you completely ignore these. You place more emphasis on these weak bars back here. There's a nice little short for you there. So try to go up, the volume's low, got rammed down, then they just... In fact, that's a really narrow spread on that up day. That's really blatantly obvious. It's just going to come right off. You've got some stopping volume just there in the background, but as I've said before, you don't just jump in. You wait for a positive response, and then you see these two bars where they're going down on low volume, and the lows are getting higher and higher. So you ignore any signs of strength in a downtrend. And the other thing is if you get no demand into one of these lines, then there's generally a very good short, although I don't have one there. So you've also got slight distribution phase there. Got quite high volume on that up day there. And then see it's tested there, and then it goes up for one day, and then you've got this wide spread down. So that can be quite dangerous. But what you're really looking for is these low volume up bars, and even these bars here, because this starts out as a down bar, closes on the high, then the next day is down. So quite high volume as it ends up as an up bar, and then that bar there, that's another weak bar. So that it does find some temporary support, but look, the response is very feeble. Okay, so you wouldn't really be looking for any signs of strength there. You've got a low volume down bar there, but it just goes up for another one, gaps up, and then it just comes right off again. So in a downtrend, you're looking for these kind of bars where it goes up, closes in the middle, low volume, narrow spread. Those are your shorts. You don't really want to be going long. Very interestingly, if you take this low, and as it's closed below that low, I would imagine that a lot of stops have been taken out, and possibly even margin calls have been triggered on that one. So as you can see, that last red bar is up on quite high volume, narrow spread, closing in the middle. So there's probably going to be no response from that. I think that was actually October last year, so that would have been in the midst of all that, bad news. And if the financials were that bad, they were oversold, no question. But they've come right back up again. I mean, Bank of America went down to $5 at one point. I mean, there were people stepping in and buying. So I know fund managers in the UK who did not buy Royal Bank of Scotland because they thought they were going to go out of business, and then they went up 30 pence or 50 pence, or they've nearly doubled or trebled in price in that sector. and you probably know who it is, so I can't say his name, but I was really surprised when I asked him. I said, "Did you buy some banking stocks?" You know, because they were well oversold and because the news had really hammered them down. And he said, "No." He said, "I thought that they were going to go out of business." But
But don't you think that Freddie Mac were not supposed to go out of business and they did?
no, they didn't because the
Well, they
government
70
stepped in.
cents, you know.
Yeah, nationalised. I think the bondholders were the ones who lost out on that one, weren't they? Ouch. So, okay, so obviously we've got a downtrend. We've got low volume. You can see now that you've got this this downtrend. This is actually going further back. So what you want to do is, once you've got two highs, you can wait for something like this where you've got low volume up bars approaching this line, and then you can probably short that. Now here you have some sort of a selling climax. You've got a fairly narrow spread down bar. Now the next bar is up on a fairly wide spread, quite high volume, and the market just gaps up. So that probably wouldn't last too long. So it's already made a high, and then it's making a second high on low volume compared to that. That probably wouldn't come off, it probably wouldn't have gone up. But the point is that once you've established your trend, you draw two highs, and then when it starts to go up to approach that high, or that line rather, on low volume, that's usually a good place to short. So you're looking for weak bars in a downtrend. So these are fairly good places to go in. Obviously you'd ignore these signs of strength. Any signs of strength here you would obviously ignore. So that one you would ignore, that one, those two you would ignore. That's actually probably no demand off that one. But I know why that's appeared. It's because the previous bar is a down bar closed in the middle. There's another weak one. That's not strength at all, that's weakness. I think that some of these indicators are probably going to get taken out, but that's I pointed that out to Tom. If you just draw two highs and then you wait for no demand into that, and he said, yeah, he thought that was a good idea, but whether it will actually end up in this program, I don't know. But as you can see, if you are short and then this line gets broken, then perhaps that's perhaps a time to close out your position, bank your profits. So. Right, okay, so stocks again. Okay, this is ATM against the Dow Jones Industrial Average. Okay, so you can see that this is the stock, price of the stock, and that's the price of the Dow Jones Industrial Average. Okay, I don't think that ATM is a Dow stock, but the Dow Jones and the S&P, they all sort of move along the same, so relatively speaking they are more or less the same. What you can see here is that this stock is underperforming the index. Okay, so the index is going higher but the stock is lower. Then the index starts to fall, and then the stock starts to outperform the index. So as you can see here, the index is falling and the stock is still rising, so it's actually outperforming the index. Now obviously you wouldn't use this stock against the ATVI. I think that may be a NASDAQ stock. So this is probably not a good example. I think ATV is ATVI. So I think that might be. I've got a feeling that may be possibly a NASDAQ stock. But if we assume for an instant that this is the NASDAQ index, although it's not. If this is another way you can buy and sell stocks, is that if you've got a stock which is outperforming the index and the index is falling, but the stock is outperforming that, then you can hold on to that stock. And obviously if the stock is below the index, then you can discard that stock or maybe even sell it short. But that's a really bad example. But anyway, now, as you can see here, this is Caterpillar, and even though that's quite high volume on an update, this stock has actually bottomed out back here before the Dow Jones Industrial Average has bottomed out. Okay, so it's already starting to go up whilst the Dow Jones is starting to go down. You see? Can you see how the Caterpillar is now rising? Okay, and the index is still falling. So this stock has actually become stronger than the index before the index has become strong. So if you see that the stock bottoms out and the index is still falling, so therefore the stock is refusing to fall as the index is still declining, then you want to get long of that stock and buy it. okay? Because the stocks will be rotated. You know, there are opportunities to be made in stocks and they get rotated. Banking sector, construction, you know, all sorts of pharmaceutical sectors. So these stocks will be rotated. So if you put one half the stock, the other half the index, and then you compare the two, you'll normally see that Caterpillar is obviously a Dow stock. You compare it to the index and you can see these subtle changes where in this instance, for example, that the stock has bottomed out and is now in an uptrend as the Dow Jones is still going down. So you want to be buying that stock. And obviously it's coming down on low volume there. And then the Dow starts to rally up as well. But this actually, by doing this, will actually give you a better opportunity to get in to a stock just before the up move.
What's the principle here that tells you that the trend has now changed? It was in a downtrend, and I see that there's a very high volume on the up bar on Caterpillar breaking that downtrend
That one,
line.
yeah.
Is that the principle? And then you're looking for any type of
Well,
volume?
Okay, so here you can see, just here, and that's 5 back, so that's 1, 2, 3, 4, 5. See how the index is still falling, but the stock has already bottomed out. The stock is actually in an uptrend. It's only just started an uptrend, but the index is still falling. Can you see that?
Yeah.
That's still down, but that's now starting to go up. Can you see that?
Mm-hmm.
So that tells you if the index is still falling, but the stock is going up, that stock is now outperforming that index, and you want to think about buying that stock. This is another way that you can trade stocks. And it actually works really well, even on, say, like a 15-minute chart. It can be really powerful, you know, really, really powerful. And hopefully you'll see that in the next few slides. So you've got the Dow Jones is obviously still falling, but the stock is now outperforming the index because it's now going up as the index is starting to bottom out. Okay. So this is DuPont against the Dow Jones. As you can see, DuPont has now topped out before the index. The index is still in an uptrend. Okay, so the index is still going up, but DuPont has now topped out. So the rotation in the stock has been a distribution phase. So now you can see that the stock is now falling, but the index is still rising. You see? So now if you have a long position in DuPont, you want to close that out and start looking for another stock. This is another way that you can compare stocks to indexes, and then you can see where the rotation, accumulation, distribution phases take place if you're a stock trader. I know some of you do Forex, some of you do futures, but for those of you who are stock traders, I mean, this is a really important trading method. If you go to File, you can then compare or synchronize charts, I think it is. And then what you can do is you can lock the cursor on each bars on each day. So as you can see, 21st of April, 21st of April. Now if you start to move the cursor on this one will follow that one as you move it on the other chart. So this is another good way. So if you've got the index which is still rising, but the stock starts to top out, then you want to quickly close out your position in that stock. Okay, so I've shown you how a stock can outperform the index, and now I can show you how the buying climax has happened in the stock, and now the index is still rising, but now the stock is starting to fall. You really don't want to be holding a long position on that stock. Okay, again, General Electric. Okay, you can see how the stock is now topped out almost at the same time, but the stock is actually underperforming now the index. As you can see, the index is still going up. You've had that down bar, but the index is still going up, but the stock is now widespread down. Okay, so they've both been in an uptrend, so I would say that General Electric is probably a Dow Jones dominant stock. It's probably a stock that moves the index. But they've both been in an uptrend, but as you can see, the General Electric has now started to underperform Dow Jones, and I think the market is weak overall. So as the market declines, then General Electric should be acting weaker than the index. So that's another clue for you if you want to, if you're a stock trader. I actually find that this is much better than just overlaying the stock on top of the index, because I find the scaling messes it up.